Looking at the Kenyan market, it's up roughly 45% so far this year. Are there any areas where the market's possibly out of kilter with reality? And do you at all get a sense that it's becoming difficult to value businesses right now in the Kenyan context, like we see with so many other emerging markets at this stage?
I think that's a really interesting and multi-sided question. If I can just start, first of all, with the very big cap stocks. I think the likes of East African breweries and a number of other ones are being caught up in this upswing of demand for frontier and emerging market equity. And I think they're trading on quite expensive PE ratios. I mean, something like breweries is on a PE ratio, I think, trailing of about 22 or 23. And by most counts, that's an expensive valuation for something like that. But I think what's underpinning it is this demand that we've seen, this appetite for whether it's African sovereign credit or African currencies or African indices, especially in the big cap stocks. So there's a bit of distortion going on there. And I think it's a distortion which might continue, because this time around, I don't sense there's a lot of hot leveraged hedge fund type money in our stock market. I tend to think it's pretty good medium term development institutional type money. Proparco came into Serena's share register in a big way recently, and those sort of folks are not going to jump about too much. So I'm okay, but you are right, there is a much richer valuation about the stock market at the moment, and I think that's being led by demand for higher yield and more more frontier type paper.
So we've got stocks like Scan Group and East African breweries in mind here. I mean,
yes,
the investor is really, as always, in a catch-22. On those stocks specifically, where it might be dangerous to join the momentum right now, do they join in, or do they risk missing a possible opportunity boat here?
Well, let's take Scan Group as an example. Scan Group traded at under 20 shillings less than a year ago. It hit a high of 76.50, so it was up nearly threefold on the news that WPP had taken a big position on the share register, that Scan Group was probably going to be WPP's sub-Saharan African consolidator plus the Ogilvy acquisition. And you are taking a lot on board with something like Scan Group. You're basically betting on Bharat Thakra conquering sub-Saharan Africa as he conquered Kenya. Now, I think it's quite possible, and you know, if you want someone in your back pocket, you really want Martin Sorrell if you're in the advertising business. But as an investor, you're now in there on a trailing P of 32, 33. You're taking a lot on promise. I personally prefer to stay away from these momentum plays, because you know they're very high beta, they get parabolic, and they can fall quite sharply. You know, we're now at something like 60, we were at 76.50. There's been a pretty big correction, and you know it still looks like an expensive stock.
Well, talking about sharp falls, we had a pretty hard hit being dished out to KPLC on Friday. That share price ending at 24 shillings. Of course, as I said, we were effectively looking at this counter trading X rights. What's your outlook in terms of performance as we progress through this week?
Well, I think the market's very long. It trades very heavy. I think on balance, you know, it's going to continue to see further pressure, probably towards the rights issue price. I know Centum and Equity have underwritten 50%, which was the government of Kenya's rights proportion. But for me right now, if you do all the maths, and it's fiendishly complicated because there's a dilution, a split, a rights issue, and then you've got to calculate backwards, you're looking at a price earnings ratio of 11 for a utility. And I think, you know, I don't know how much more juice investors are looking to get, and I think you're seeing a gradual realization that, you know, this is not a short slog, it's a long one. And, you know, once they get the capital in, they've got to expand the capacity, and really as a shareholder, you're looking forward, you're buying for 2 years forward. And, you know, when you buy for 2 years forward, it can get a little bit tricky.
Well, you touched on Centum there, underwriting this rights issue. We've seen that counter trading up 132% year to date so far. What's your view on Centum? Because in the past, we have heard that this is a stock you want to get into if you want to buy into the, you know, the broader market upswing.
Well, it's a very interesting counter. It has the youngest CEO at the Nairobi Stock Exchange. I think he's only about 30, James Moria. I heard him speak about 18 months ago, and he laid out his roadmap. And I think they've very much retooled Centum for higher alpha returns at this sort of price on a trailing PE of 14, with a bulk up and acceleration going on in all their metrics. I like it, and I think there's still value to be had. In particular, what I like about this is they've bought big lots of land in capital cities around this region in East Africa, and I think that is going to really pay off well. Property prices are in a very sweet spot, under leveraged, and are still going higher, and I particularly like that play that they've put on, and they seem to be divesting from the listed stock market to some degree as well.
Well, Aly Khan,
but it's not a, sorry.
No problem. Well, I'm going to have to let you finish that thought.
It's not, you know, it's not a dividend stock. It's a high growth alpha stock. So just bear that in mind. They're not going to pay dividends through 2014, I'm told.